welcome back to the channel. Testing. Hope you can hear me. I got my AC on. Hopefully it's not too loud. So today was the feared Fed meeting and did not disappoint. I had my phone pulled up on spot puts at 255 per contract. Within 30 seconds, maybe 45, them same contracts was about 550, meaning the price of that share doubled, more than 100% gains. So as you may or may not know, sounds like one of my favorite lines, but as you may or may not know, today was the Fed meeting in which interest rates were hiked, or interest rates went up by 75 basis points, which is 0.75%. So yeah, that's bad news. It's bad news, but it's good news. It's bad news for investors. Like for me, that I own real estate, it's bad news because the high interest rates brings down home prices. A lot of that accelerated equity that we had the past 2 years since the sickness is kind of going to be given back to the economy. But nonetheless, so now what this means for us, for the economy in general, is that there's going to be a lot of economic changes pretty much across the board. So we already see high inflation. We've seen gas prices get to record highs. We've seen real estate interest rates on mortgages go up. We've seen price of food going up. We've seen the price of almost everything is going up due to inflation. And the way that the Fed fights this inflation is by raising interest rates. Now, raising interest rates is a good thing as far as the Fed sees it, or it could be considered a good thing because it does slow down the economy. So all the free money that we were getting during the sickness is kind of going to be spent, because now, everything costs more. So you're going to be spending more of your, you're going to be spending more of your money due to these increases in prices. So basically, what the Fed is trying to do right now is to fight inflation. Inflation is ridiculous. I went to the grocery store maybe 2 days ago, and I kid you not, by the time you buy milk, bread, butter, cheese, just little, even breakfast items, you're spending $100. The price of everything is through the roof. The price of gas, I remember about a month ago, it came down now, but it was through the roof. The price of everything is through the roof. But with these raises in the interest rate, it's good and bad for investors, depending on what type of investing you're doing. Now, for me, the way how I look at it is that even though the equity for property is going to go down due to the prices of homes dropping due to the increased interest rates, I look at it as it's a good buying opportunity. It's a good opportunity to get into the market. It's bad if you already own property. It's not even bad. You're just gonna lose a little bit of equity. It's nothing bad really, but it's a good opportunity to purchase more property if you are looking to be a real estate investor. Now, somebody like me, I've been looking for the opportunity to get real estate cheaper, because as you can see in the background, Rich Dad Poor Dad, that's one of a lot of real estate investors period. That's a lot of people's favorite books when it comes to investing. So I've been looking for this opportunity, so it's finally here. Well, it's approaching, so I'm definitely excited about that. But as far as the stock market, so that Fed meeting today basically sent the stock market into a very bearish environment. The S&P 500 took a major hit. I am a lover of SPY, which is an ETF, exchange traded fund. I get into that in another video. SPY went down. I swear today I saw SPY go down maybe about $6 within like a minute or so. But the S&P 500 took a big hit, which means that the overall market took a big hit. A lot of big cap, small cap, all type of the whole stock market overall, the NASDAQ took a big hit today with the news from the Fed. So this interest rate hike is going to affect the market in all kinds of ways, especially real estate, which is one of the biggest things I'm looking at. So it sent the stock market into a very bearish environment, and a lot of stocks took a big hit. My prediction is tomorrow would be a continuation of those big drops in the stock market. Real estate prices is headed towards a correction, which a correction by definition is the price dropping by 10 to 20%. So 10 to 20%, of course, $100,000, 10 to 20% is $10 to $20,000. So expect to see a drop in the value or the price of your home by about that amount before being able to grow in a more steady way, because the prices of real estate went up so much throughout the past 2 years. It was kind of an unnatural growth, so things are going to go back to a little bit normalcy. Yeah, but prices are going to go to a normal growth. I believe the stock market would also be in a correction as well. If not now, then going forward, the S&P 500, I believe, will head into a correction. We also do have another Fed meeting in November where a 75 basis point increase is expected, and another basis point of a 50 basis point increase in December. So we should be seeing about another over a 1% increase in interest rates before the year is over. And what this means is that we will continue to see home prices maybe possibly coming down some, as well as the stock market. With these corrections in the market, my prediction is that these corrections are healthy, especially for investors. If you have cash put aside, you have a large cash position, it'd be the perfect opportunity to put in that cash into these markets, whether it be real estate or it be the stock market, and see your money grow at a much faster pace than it would have grown in any other way. I'm the type of investor where I always look for drawbacks, because that's where the money is made. The most money is made in a drawback or a recession. And a recession is when a lot of people become rich. In 2008, when we did have the Great Recession, a lot of investors made a lot of money, and then a lot of new investors became rich off of that. When you're able to buy things for under the value, and then the value increases, you're able to make a whole lot more money than you would make in any other circumstance. Yeah, you're able to make a whole lot more money than you would make in any other circumstance. Man, I wish I just had a little bit more money put aside. Right now, I do trade options, so I'm hoping to maybe be able to have some great days during the next 2-3 months before the year is over. I'm able to put some money aside and go ahead and go buy more property, or reinvest my money into some of these stocks that took a big hit, that also pay dividends. It's a good way for me to make some passive income. So I'm trying to build my cash position right now to take advantage of this I would say once in a lifetime opportunity, but we kind of did have the opportunity in 2020 where prices took a big hit and came back. So take advantage of this opportunity period, because this is good. This is good for investors. This is good for anyone that wants to get their feet wet. If you're watching my channel, I know that you are an investor. You're interested in your financial growth. You're interested in your financial freedom, your financial independence. So if you're watching this video right now, I hope you getting excited and know that it's about to be your time to shine, because you're going to be able to see some exponential growth. Yeah, I don't think the prices of much things will go down as much as I want it to. The grocery store is very expensive. I don't get food stamps, but I see the real estate market. I do see a way for me to make a little bit more money in real estate as well as stocks. Just throw my money into the S&P 500 and get some new property. So I do see that as an opportunity. So even though it's a bearish environment economically, it's also a lot of opportunity for buyers. You know, a lot of people, they don't like to see red days in the market, but the red days is when you make your money. You get your stocks, you get your ETFs, you get whatever you're buying in the market for cheaper, and those prices always go up. Historically, the S&P 500 goes up, 8% per year. So if these stock prices go down, you'll see a bounce back. But if you do have money put aside, make sure you're ready to throw your money into the markets wisely. This is not financial advice, but put your money into the markets wisely. And if you do like this video and want to see more videos like this, and you're interested in your financial growth, your financial success, your financial future, make sure to like, comment, subscribe, and Have some soda. Hit the bell icon and all that good stuff. Just make sure you stay tuned with this channel. This will be one of the biggest YouTube finance channels. Not to put names out there, but it's gonna be like a earn your leisure. Hopefully, shout out to you guys. Hopefully y'all tap in with me soon enough. Graham Stephan, all these great YouTube finance channels. This will be one of those. So make sure you like, comment, subscribe. Stay tuned for more videos, and peace.